Hello there, this is me, Ansh Pandey, and you are watching Oneindia English. In his book, The Price of Inequality, renowned Nobel laureate economist Joseph Stiglitz had once raised concern about the potential risk associated with online banking and financial services. While he never criticized the idea of online banking or has even specifically mentioned discrepancies or unwanted customer loading, he had highlighted the broader issue of inequality and the potential of online banking to exacerbate disparities in access to financial services. In the 21st century, the internet has become an indispensable with virtually every aspect of life reliant on it. However, commercial banks, driven by sometimes self-interest, may be disregarding established guidelines and systems in online banking. For instance, on 31st of January 2024, the Reserve Bank of India (RBI) took action against Paytm Payments Bank Limited, prohibiting it from accepting deposits or top-ups in any customer account after 29th of February due to ongoing non-compliance and significant supervisory concerns. Recently, similar measures now have been directed at the Kotak Mahindra Bank by the RBI, prompting widespread apprehension in India. However, it's important to note that these actions, while significant, may not pose an immediate threat to the people in this banking system. On Wednesday, that is the 24th April, the Reserve Bank of India took significant step barring the Kotak Mahindra Bank from boarding in new customers via its online and mobile banking platforms and also from issuing fresh credit cards. However, existing customers, including those with the credit cards, will still receive services as per the RBI statement on 24th of April. These actions were prompted by major concerns arising from RBI's IT check of the bank in 2022 and 23 and the bank's ongoing failure to address them promptly and thoroughly. The RBI highlighted that for 2 years in a row, the bank has fallen short in its IT risk and information security governance, contrary to the regulatory requirements. The Kotak Mahindra Bank reportedly has failed to meet RBI's requirement for storing new customer data, particularly concerning the security and privacy of sensitive information, indicating deficiencies in its IT infrastructure. The bank has also fallen short in IT risk and information security, contrary to the regulatory guidelines. In response, the RBI has directed the bank to bolster its process and system to meet the regulatory standards and protect the customer interest first. After that, the bank will be removed from its list. The Kotak Mahindra Bank, in response, has also acknowledged and has directed and has also pledged to address the issue by enhancing the system and process for compliance. The bank is expected to undergo a review process to demonstrate adherence to the RBI guidelines before the restrictions are lifted. The RBI has also emphasized that these business limitations are imposed to safeguard the customers and prevent any sort of prolonged service disruption, which can severely impact not just the bank's ability to provide efficient service but also the broader digital banking and payment system of India. This raised concern among many that after the Paytm Payments Bank, a new bank is on the horizon of ceasing its existing service. However, one must note that this is not the case with the Kotak Mahindra Bank, at least for now. Similarly, in 2020, the RBI had imposed comparable measures on HDFC Bank, which is India's largest lender, due to a string of technical glitches over the 2 years. The central bank had placed temporary restriction on banks' new digital banking launches and had proposed business-generating IT applications until the outage issues were resolved. Additionally, the HDFC Bank was also temporarily prohibited from issuing any sort of new credit card to customer. However, in June 2023, the RBI eased the restriction for new customer onboarding by the HDFC Credila, a subsidiary of the HDFC Bank. The sequence of events highlights RBI's proactive stance in enforcing the compliance and ensuring the stability and reliability of India's banking system. But yes, it also raises one major question, that why isn't there any strong mechanism that outright prohibits or even nullifies any sort of chances by the banks to violate the existing regulations?
Subscribe subscribe to One India channel and never miss an update.